Good evening and welcome to the Money Show, the show that puts your money matters front and center. In a world full of financial noise, we are here to bring you clarity and confidence and control over your personal finances, whether you're planning for retirement, building a portfolio, navigating debt, or just trying to make smarter money decisions. This is your space, your guide, and your weekly check-in with your wallet. Every evening, we bring you insights from top financial experts, decode the latest trend and answer your burning questions on saving, investing, spending, and everything in between. Because here on the Money Show, we believe one thing: you don't have to be a finance expert to take charge of your money. You just need the right advice. And today on the show, we will also focus on your portfolio queries. So just in case you have any question related to your financial portfolio, you want any guidance or recommendation from our experts, to send across your queries on 865-797-4571. The email ID is themoneyshow@etnow.tv. You can send across your queries out here. All right, so let's begin, and we'll be talking about ITR filing. That's in focus this entire week, because we have our experts who will be guiding you and helping you navigate all the difficulties you're facing while filing your ITR returns. And I have with me Tarun Garg, Director, Deloitte, who will be helping us frame better strategies for our ITR. And Tarun, hi, good evening. Welcome to the show. And today we'll be talking about ITR filing for self-employed. But let me just begin with the right kind of definition as to who all really fit into this particular category.
Good evening, Kavita, and thank you for calling me on the show. A very important point on the self-employed. So, see, when we see the definition as such, it is not defined who is a self-employed, but then broadly, these are the individuals who are other than the salaried earner people who are running their own either profession, who are into the businesses or in the small businesses. They can even be some of the gig workers or people who are investing into, say, trading or even into crypto assets and all. So these are the people who typically are self-employed, and people who run their small businesses, and they are kind of full-fledged trading also. Their income is also categorized as business income, and hence these are treated typically as Kavita self-employed individuals.
Right. Let's also talk about the kind of forms that they should be filling up, and also the way they need to, go around it, because we're talking about their income and their spends, investment, everything about their earning and spend. So how can one go about it?
So typically, self-employed individuals, they cannot fill their in ITRs into ITR 1 or ITR 2, because typically these two income tax return forms do not have any specific field for declaring income from business or profession. And since you being a self-employed individual, your such incomes shall be treated as income from business or profession, and hence either ITR 3 or ITR 4 will be applicable. Now, even how to distinguish between these two forms. So ITR 4 typically is not applicable for individuals who are having business income or professional income in excess of 50 lakh rupees. And if you are kind of mandatorily required to prepare your books of account and get that audited also, then also ITR 4 will typically not be applicable to you. So depending upon the businesses you are in, the amount of incomes you have, you need to also select between ITR 3 and ITR 4. So ITR 4 is literally, we can say, it's a Sugam form. It's a simplified version, as we say, of ITR 1, which is a Sahaj form for applicable for people who are into service class. So it is similar to that, we can say, Kavita.
All right. Very important, because a lot of people just land up filling ITR 1, which is not the form for them. Also, I really want to understand, since we're talking about self-employed people where there will be irregularity in their earnings, even the expenses would be deferred. How can one really take a stock of all of this and do the right kind of reporting? Because right kind of reporting is very important, Tarun. We don't want any scrutiny coming up or any kind kind of inquiry coming up later on. And because we're talking about small businesses also, what all can go in the income part, even if it is deferred, even if it is irregular?
No, a very important point, and I'll just take first part of your question. You said a lot of individuals end up filing ITR one even if they are having business income. So no, that's not the right sort of a form, and it can lead into trouble. And if you are declaring your business income into other sources income, the authorities can catch hold of you because you are then trying to either report a lower sort of an income, and then also because typically such incomes are taxed at different rates, and in business income certainly have a different kind of a category and slabs into applicable the rate of taxation. So you need to select the right sort of form which is applicable. And the second part, Kavita, that you raise a lot many times, these individuals may not have a regular stream of income. In such case, typically ITR 3 could be applicable because you will have to prepare your full-fledged your financial statements, and then prepare your P&L accounts, your incomes which are getting deferred, because in the sense that you have not received your income as of now. And then there could be different methods of accounting also. Are you following a cash system of accounting? Are you following a accrual system of accounting? So these systems, because section 145 permits you to prepare your forms and returns accordingly. So certainly you need to be sure on the return form that you're selecting. Prepare your books of account well in advance, and ITR form typically can be selected when you are opting for a presumptive taxation, and ITR 4 typically saves you from an audit requirement. But then ITR 3, in such cases where the incomes are getting deferred, is the typical form that you might need to get into, and then get your books of account audited also. There are, of course, thresholds that one need to take care, and there are different presumptive income sections that are applicable. Say, for example, 44 AD is applicable for individuals who are running small businesses, and 44 ADA is applicable typically for individuals who are professionals and want to go into the presumptive taxation regime. So these are some aspects, nuances which individuals need to kind of consider. And if you are opting for say presumptive taxation regime, then 15 September is the deadline which will be applicable to you, and get your return filed on time, Kavita.
Uh, Tarun, when we talk about self-employed people, the kind of investments they have is very scattered, and because the income is not regular in a lot of cases, what they try and do is they have their income sources really diversified. Now, how can one take stock of all of that? They might be in equity, they might be into fixed assets, there might be income coming from rentals. How first of all, it's very important to report your income from all the sources, but how can one take stock of all of that?
So, Kavita, very important point. So, the easiest way to choose and pick up that income is that you need to take a stock of your all those AIS, TIS, or all such regimes, in the sense that you also check your bank statements, in the sense from which sources these incomes are coming. And typically, if you are putting your money into equities, you will get a statement from the fund managers, and you just need to ask them. And many a times these fund managers provide such statements online as well, so you really just it's available on a click of a button. Then AIS, TIS is of course a very robust form that can give you all the streams of income you are having, be it equities, be it dividends, even if you are having bond interest. So, and if you have made investments into, say, term deposits, fixed deposits, all those interests are also captured. And even nowadays, those savings bank interests are also getting plugged into those AIS, TIS. But having said so, there is a requirement that you still review those income streams and match from your bank statement, because many a times we've still seen either a higher income is getting plugged in AISTS, which is not getting reflected into your bank statement. So proper sort of a documentation and verification is required, and that is the typical reason we say don't keep your ITR filings till the last end, and do give enough time, say 2 3 days, to do verify your statements, filings, and all those streams and all with your bank entries.
All right. I also want to understand expenses as deductions that can be claimed by self-employed people.
No, important. So see, the typical expenses that one can claim is, so on your day-to-day expenses, if you are having, uh, say, I'll take an example. If you are into a profession and you are, say, into chartered accountancy profession or doctors, whatever, say, on if you have kept a person as a receptionist, or some person who is taking care of your whosoever is coming, then keeping those patient files and all, so those expenses which are in the normal course of the business can be claimed as a deduction and expenses. And even if you are invested heavily into some of the machineries and all, so those can be claimed as depreciation. Even if you are having, say, laptops, computers, that can be claimed as expenses. Even your mobile phones also, provided you're saying that it is you being used into your business, that can also be claimed as deduction for your expenses and all, Kavita.
Tarun, what about tax regime now? Unlike salaried employees, people with income from business or profession do not have that leverage or that benefit of changing the tax regime every year. So they need to really decide on that carefully.
Absolutely, Kavita. See, for the business and profession, unlike for the salaried class, where you can opt and switch in, switch back. So once for these class, while the default regime is the new regime, but if you opt out of the default regime and say go into the old tax regime, and you want to continue with the old tax regime, you really need to declare that, and there is a specific form that also needs to be filled in prior to filing your return of income. So again, timely file your return of income is a mandate. If you miss this deadline, then the at least the old option to choose the old regime is gone away forever, and then you will be mandatorily required to go into the new tax regime. That is for sure. And but if you have opted for an old regime, and then you need to either continue with that old regime for the business or professional income people. And if once you switch back to the new regime, then it will be a mandate. You cannot then switch back to the old regime till the time you are still earning a business income or a professional income. And if tomorrow down the line in the future, if your streams of income are no longer from the professional income or business income, then still that option of opting a new regime or old regime can be there. But will be interesting to see how under the new tax, new budget, new bill that has come up, will that still be kind of availed. As of now it is there, but then how long this old regime will stay is a point to be seen, Kavita.
All right. I want to understand the process of claiming TDS now, how important it is and how can one do it?
See, process of claiming the TDS or TCS into while filing the return of income is quite simple, I would say. But the only thing is that the TDS TCS can be only claimed till the time you are having, say, you file your return of income on time and all those things. Because a lot of time, what we have seen is that uh, people say that, hey, my income is less than the mandatory taxable limit, say 2.5 lakh or so, and then do I still need to file my return of income? But then you also need to see that without filing the return of income, you cannot claim a refund which is actually due to you. So to answer your question, Kavita, file your income tax on time, claim into the TDS and TCS schedule, fill in all those pan and the TAN entries of the deductor or the pay. And if you have say even if you are a purchaser of a property, and then in that situation also you would have deducted taxes, or if you are a purchaser of a car or you've gone for a trip, then also some other organization would have deducted TCS for you. So that TCS is also required to be claimed while filing your return of income.
All right, I think, Tarun, we've covered all the aspect of how self-employed can file their ITR. Thank you so much for being of help to our viewers today, and see you tomorrow again with a new aspect of ITR filing. Thank you so much.
Thank you, Kavita. Thank you.
All right, let's move on, and that part of the show where we connect with our viewers. And before I call upon my next guest, let's flash our WhatsApp number and email ID, because just in case any tax related query if you have,